So, you want to start investing, but every time you think about it, your head just starts spinning, right? Well, you're in the right place. We're going to cut through all that noise and lay out a super simple, clear roadmap to get you started on the right foot, starting right now.
It's the biggest question, isn't it? You know you should be investing. You know it's important for your future, but where's the actual starting line? It can feel invisible. I get it. But the good news is that first step is way more straightforward than you probably think.
Okay, here we go. This number right here, $1,000, that is your starting line. It's not some huge, scary figure that feels impossible. It's a really achievable goal, and it's the key that unlocks this whole journey. More importantly, it helps you avoid the single biggest mistake that new investors make.
Let's think of this as a mission, a challenge. Your first mission is a 30-day sprint to build this $1,000 starting fund. And this isn't just about saving money. It's about building momentum, kind of like a warm-up for the marathon ahead.
So how in the world do we get to $1,000 in just 1 month? We break it down. We're going to attack it from two sides, saving about $400 and earning an extra $600. Do the math. That's only about $33 a day. See? Suddenly that feels way more doable, doesn't it? And these ideas are super practical. I mean, just cutting out 2 or 3 takeout meals a week, that can easily save you over $150 right there. On the earning side, most of us have stuff sitting around the house we could sell. That can bring in a couple $100 faster than you'd think. You don't have to do all of these. Just pick 1 or 2 from each column that feels right for you. All right, so we've covered the how of getting to that first 1,000. But now we need to talk about the why, which honestly is even more important. This money isn't just a number. It's a tool that's going to help you build the right mindset and sidestep that huge pitfall I mentioned earlier. This $1,000 is your starter emergency fund. Think about it. Life happens, right? A tire blows, the water heater breaks. Without this little cash cushion, any small crisis could force you to sell your investments to cover the cost. And that's usually at the absolute worst time, locking in a loss. This fund is your shield. It protects you from making emotional, panicked decisions. And this brings us to a really fundamental rule. Just burn this into your brain. If you think you're going to need that money in the next 3 to 5 years, it does not belong in the stock market, period. That short-term money is for emergencies. Your investments are for the long term. Keeping those two buckets separate is the secret to investing without fear. Okay, so you've built your starter emergency fund. You are now ready to actually start investing. But before you jump in, you need the basic rules of the road. These 3 principles are going to help you navigate the market safely and, well, effectively. Rule number 1 is absolutely crucial. You have to think in years and decades, not in days and weeks. Checking your portfolio every single day or trying to time the market, it's just a recipe for anxiety. It puts you on this emotional roller coaster where you're tempted to buy when prices are high and sell when they're low. Literally the exact opposite of what you want to do. This really shows the difference in mindset. You've got the investor, that's the tortoise. Slow, steady, consistent, just buying a set amount on a regular schedule. Then you have the day trader, the hare, who's reacting to every little bit of news and hype. Your goal is not to be the hare. You want to be the tortoise. I promise you, consistency is how you win this race. All right, next up, we have to talk about that temptation to find the next big thing. You hear about some hot stock on social media, and it feels like a sure bet, right? But here's the thing. Putting all your money into one company you don't really understand isn't investing. It's speculating. And that is a very, very risky game to play. I love this quote. Your goal early on isn't to be clever, it's to reduce risk. The smartest way to reduce risk is through diversification. Instead of trying to pick that one magical winning stock, something like a broad market ETF lets you invest in hundreds or even thousands of companies all at once. It's a fantastic place for a beginner to start. Look, you can't control what the stock market is going to do tomorrow. You can't control the economy. You can't control the news headlines. And obsessing over all those things you can't control is just a total waste of energy. So instead, you're going to focus all your attention on the powerful factors that are 100% in your control. And here they are, the 3 things that really matter. You control the fees you pay by choosing low-cost funds. You control how much money you actually put in. And maybe most importantly, you control your own consistency. If you can just master these 3 things, you will have a massive, massive impact on your own success. So we've built our foundation, and we've learned the rules. Now let's put it all together into a simple, actionable plan that you can start today and just keep following for years and years.
This is it, the set and grow plan. Step 1, build that $1,000 emergency fund. Check. Step 2, invest a small, consistent amount. Seriously, even $25 a week is a fantastic start. Step 3, stick with those diversified, low-cost funds to keep risk low. Step 4, and this one is a game changer. Automate everything. Set it and forget it. This takes the emotion out of it and makes consistency effortless. And finally, step 5, whenever you get a raise or have extra cash, just bump up your contribution. This simple, repeatable process is the real secret to building wealth.
If you only take one single thing away from this entire explainer, please let it be this. Success in investing isn't about some frantic burst of activity. It's about the quiet, the almost boring, but incredibly powerful habit of consistency. Month after month, year after year, every time. And that brings us to our final thought. Let's completely reframe the goal here. This isn't about buying a lottery ticket and hoping to get rich overnight. This is a deliberate, strategic plan. It's about building wealth on purpose. So what does that mean to you? Answering that question for yourself, that's the real first step on what can be a very rewarding journey.